Welcome to the Infrastructure Podcast. My name is Anthony Oliver, and today we have another special episode, this time recorded live at the recent Transforming Infrastructure Performance Summit in Toronto, Canada. My guest is Divya Shah, Managing Director of the Trade and Transportation Sector at the Canada Infrastructure Bank, a publicly owned organisation created specifically as a catalyst to unlock private capital, support transformative projects and enable the kind of nation-building investment needed to meet 21st century challenges. And with more than 16.8 billion Canadian dollars invested so far in 102 projects across the country, under Divya's guidance, the CIB is certainly reshaping the way Canada builds. Now, of course, infrastructure has always been central to Canada's story, a vast country knitted together by railways, ports, roads and power grids that enabled economic growth and connected communities. And today, as Canada accelerates its transition to a low-carbon, resilient and inclusive economy, infrastructure has never been more critical or more political. And certainly there are big challenges and big opportunities ahead for Canada. The question is not just how it builds, but how it builds faster, smarter and more inclusively. So I kicked off the conversation with Divya by asking her to set the scene as to how she describes the Canada Infrastructure Bank and its role in driving this sector forward. Let's get stuck in. Divya, thanks for joining me.
Thank you, Anthony, and thank you for having me at the podcast.
It's an absolute pleasure. There is a lot going on right now, and I try to, I suppose, set the scene, but put it in your words. For those less familiar, what is the Canadian Infrastructure Bank, and what's its role in driving the sector forward?
Thank you. The Canada Infrastructure Bank is a federal crown corporation with $35 billion that were endowed to us to invest in large infrastructure projects or projects of priority interest to Canada. Our mission is to get projects unstuck, to have projects which have gaps in them, and those gaps can be a variety of different things. It could be affordability gaps, it could be economic gaps, it could be things like your ramp-up period in the front end is so heavy and difficult that a private investor cannot take that risk. Our job is to come in and unstick that and make projects happen.
So that's its unique selling point, I suppose. It is its ability to unstick projects, and that's what makes it different from, I suppose, traditional lenders.
Absolutely. I think between the government and traditional lenders, we actually sit really nicely in the middle of the two. We actually work very closely with bank lenders and commercial investors. They are there. Our mission is to crowd in private capital. But we have to take a little bit more risk for more flexible terms and conditions, whereas a private lender would not usually do that.
Because that's always the criticism of, I suppose, public funds, that they crowd out rather than crowd in. But how do you do that then? How do you crowd in?
So again, when we look at a project, the first question we ask is, why can't this be done in the private sector? What's stopping it? And what's the gap? What's causing this project not to happen and not to be financed entirely by the private sector? And then we work backwards to understand what are the terms that I can provide? What are the interest rate that I can provide? How can I help the private sector move this forward?
So how do you measure your success then? Is it capital mobilized? Is it projects completed?
And so again, this is a really good question because we have to take more risk at a lower cost of capital. Clearly, hurdle rates are not our success factor. So CIB is an impact investor. We measure our success based on GHG reduced per dollar invested, GDP or economic growth for every dollar invested. And we try to maximize that for every project that we look at.
So every project, there is that detail of analysis about every dollar that's invested.
So impact analysis and benefit analysis is extremely important. As important it is to still have a project that's financially feasible and crowd in, but priority one is impacts and benefits.
Because whether you're in Canada or many other parts of the world, actually getting these projects underway is huge challenges there and requires an awful lot of coordination. And I see that Prime Minister Mark Carney has just announced the creation of a new major projects office, the MPO, to serve as this single point of contact for these nation-building projects and getting them built faster. How does CIB and the major projects office work together?
So it's fascinating. We are thrilled to have the Major Project Office because you do need a central agency sitting at the top, coordinating, collaborating, changing policy and regulations. CIB has a unique role in the ecosystem. Think of us as the financing arm of the government. We help finance and invest in projects. I provide a lead arranger role and a due diligence advice to the government. So there's a lot of synergies and complementarity in the way we work. And we really look forward, and we're already doing some projects with them right now.
So it's a good thing. It's a good thing.
It's a fantastic thing.
A transformational thing?
Absolutely. I mean, yes, proof will be in the pudding, but from whatever we are seeing right now, it's exciting. The sense of urgency and the action-minded approach they're taking is really important. I mean, we need to get this infrastructure built. We need not to cut red tape, but to navigate it and to make it streamlined. And I think those are things that they're here for.
Certainly, there is an awful lot to do. And as I said, we heard from the minister earlier on about the scale of the challenge. I mean, how would you describe the current state of Canada's infrastructure market? Is it strong? Is it under strain? Is it somewhere in between?
Well, I'll say, a lot of us have been a part of this industry for over 20 years now, and there's been a lot of infrastructure investment. But I just read somewhere, I think the average number they put out for the infrastructure deficit for Canada is about $270 billion all the way to $1 trillion, depending on how you look at it. That's not a small number, even though we've made a heavy dent into it. I mean, there have been companies like Infrastructure Ontario, Partnerships BC, SaskBuild, who have been investing in provincial infrastructure, but there's a lot to do. And you've mentioned that CIB has now invested in 100 projects since our inception, which is only 8 years.
I said 102, actually.
102, I like that. Very precise. With $17 billion invested, but that $17 billion has catalyzed $50 billion. And that, I think, is what's interesting, because these projects will not happen, Anthony, just on the balance sheet and just by the government through grants.
So where are the biggest gaps then? I mean, housing, transit, energy?
Where do we start and where do we stop? I would say all of that. I think the way I like to look at it is we as a country need drivers of economic growth. What is that? Trade, transport. We need investment in railway. We need more connectivity, investment in trade corridors. But we do need to keep our eye on decarb. So clean power needs are important, increasing transmission to areas which are not yet there so that those communities can grow and those industries around that can grow, I think is really important. And then, one more thing, which is Indigenous reconciliation. That is a must and has to happen across the country to make projects go through. So CIB is an investor in projects. All our investments have to be repaid. We do not provide grants or subsidies in any form for any project. But what's really interesting, and when I talk about the flexibility that we can bring to the table, is I can sit anywhere in the capital stack. I can be a senior lender if that's needed. I can be subordinated lender taking a whole bunch of very interesting risk, not necessarily at the cost that a market lender would charge for that risk. Or I can take an equity investment because this is so important for the nation. And, something that we look at from an equity perspective is if we are catalyzing a new industry and no one wants to take that kind of risk, we become quasi-equity players in that industry. And we're not afraid to take that kind of risk. And so, again, it all depends on what's our role in that project, in that sector. How am I crowding in private capital and how can I make it happen?
And that cuts to the heart of this issue around crowding in versus crowding out, because you need to position yourself in the right place to make sure that the private sector can still actually go in there.
I mean, Anthony, capital is scarce. Yes, we have 35 billion, of which 17 has been invested, so we have powder dry, but capital is scarce within the private capital, within the public capital, and definitely within the government. We have to work on projects in a way that we can extend our financing and funding in the best efficient way possible.
So do you find yourself being drawn or being pressurized into taking on those difficult, harder to deliver projects?
Well, I think it's our job. And I take it on very happily. I think this is what we were created for, which is, and it's interesting, it's not just the mega projects. We actually work with small communities in the indigenous regions, and we work with them to help them with their community builds. So it's not a matter of the size. All projects are very complex. It is our job to sit in the middle and to look at how to unstake, how to work with the various stakeholders to make these complex projects happen.
And is it getting harder? Because we're looking at huge changes and shifts in geopolitics. We're looking at huge shifts in climate change and the impacts of that. We keep hearing an awful lot about the need to build resilient infrastructure. Presumably there's an awful lot more on your desk. 102 projects is a lot, but I imagine there are thousands.
So yes, geopolitics and shifts cause a lot of disruption, but it's actually an opportunity from where we sit. The need to invest in removing trade barriers to allow for goods to move efficiently across our nation and international markets is more important now than ever. And a great example is, a couple of examples from CIB is we've invested in, with Port of Prince Rupert in the CAN Export Logistics Hub, which increases the export capacity of one of the busiest ports in Canada. We've also invested with, just recently, with a project with Can-Do Rail. Can-Do Rail is one of North America's largest first mile, last mile rail service provider. And that just has doubled the capacity of trade moving from Alberta's industrial heartland and moving Canadian goods to international and national markets. So yes, it's a challenge, but boy, it's an opportunity. This is what we need to take. The momentum is here and we need to catalyze it. Our job is to look at, GHGs reduced for every dollar invested. And we work with the clients, whether it's building retrofits or whether it is providing clean power or district energy or doing industrial decarbonization. I think the idea is all of these sectors are important. So we actually are out there doing active business development, trying to make all of these projects work in different ways. And we have different products for building retrofits as compared to industrial decarb, as compared to, working with provinces on call for power.
So the challenge is basically provide an opportunity for the CIB to really step up and get into it.
I would say it's not just the CIB. I think the whole of the government is looking at this as this is the opportunity we need to look at and see how can we change our policies, how can we change our regulatory requirements. We've heard this quite a bit today about why those are causing projects to not happen. I think this is the opportunity for all of us to look at it and see how can we do things differently and faster.
Certainly, it's all playing out live right now as those geopolitics are being hammered out with trade deals, etc. But Canada does also seem to be quite innovative when it comes to project finance.
I absolutely think so. Some of the best examples you have out there is, I would say, REM that was done by CDPQ Infra and the model that they came up with to catalyze projects and to make something happen is kind of neat. So there are many different approaches we've taken. Something that CIB has recently worked on is we provided $1 billion loan to the Airport Montreal. A question we always asked is, well, why Airport Montreal? They are an airport and they can raise unlimited capital. They have an ambitious $10 billion project that they're about to embark on. And airports rely on passenger volumes. Now, they have bounced back from COVID faster than any other airport in Canada, so they need to build. But they're building for the future. And so my $1 billion loan, which is in a way a drop in the bucket for what they're trying to do, provides them with financial flexibility and allows them to keep their credit rating at the same time.
So it provides that security that they can then bring others in to provide the majority of the money.
And the thing is that we've seen what happened in COVID. There was no one traveling during airports, and airports rely on that revenue. So our loan actually provides that flexibility where when you have shocks in the system, there is relief that's provided to the airport from a interest perspective. So it's kind of a neat structure, being creative in that particular situation.
Well, that was one project I was going to ask you about, but another one is that you recently backed the Sturgeon Terminal expansion in Edmonton. Why is that so significant to the economy of Western Canada, and why did you get involved in that one?
So again, great question. Can-Do Rail, so this is Can-Do Rail's project. They were originally looking at it to build an expansion of, it's a current rail terminal, so they're looking at an expansion of that. Can-Do Rail relies on anchor tenants to go out and build their projects. And their anchor tenant decided to pause a very large project in the Alberta industrial heartland. And pause it indefinitely, as they say in the public market, but again, there's questions. So their decision at that point is, should we build now or should we delay and wait till this anchor tenant comes on? And because CIB was able to help them with interesting terms and conditions of a loan, they can go ahead with the project, which allows them to double the capacity of trade within Alberta's industrial heartland.
And that is at the heart of the whole investment. It's supporting that stronger, more efficient corridors that really help trade, as well as obviously providing a better functioning port.
Exactly. Moving goods from a very important region of Canada into our ports and across the nation is extremely critical. And if we had not invested, that would have been delayed by years.
Yeah. But as you say, capital is not unlimited, so you have to prioritize. You have to make a choice between different transportation projects, whether to go for decarbonisation projects, whether to go for housing projects. How do you do it?
It's, again, the beauty here is that not all projects are shovel ready on day one. Right, so you have to work with clients to figure out, do the due diligence, work on their requirements, do their planning and design, and then go and invest. So not everything is happening at the same time, and it's our job to, like, again, the way CIB looks at it is, yes, we have about 10, 15 billion more to go. But if we do our job really, really efficiently and we make so many projects happen that are in the national interest, whilst not using subsidies and grants, no one's going to shut us down at the end of that, right? So again, for us, it's to find those projects and move those projects one level up and then continue to invest in them as they are shovel ready.
But they must also be government officials or your bosses who say we need to prioritise certain areas over the next decade. I mean,
absolutely.
What are they then? How do you see the CIB's priorities? Is it about critical minerals? Is it about hydrogen? Is it about digital? Is it about AI?
I think all of those above are interests for Canada. Currently, the CIB does have a very large mandate for critical minerals. We actually work directly with mining developers on greenfield projects for everything from graphite to lithium to nickel to rare earths. We just helped create a really interesting product with a rare earth mine earlier this year. And we also work with government, provincial levels and municipal levels on building infrastructure that opens up mining regions. So there's a lot of work to be done there, and critical minerals are your building blocks for both the digital and the green economy. So yes, I think this is the thing about the deficit that's interesting. You have a deficit and you have even more industries that are coming up as new industries to invest in. You just had your session on AI and energy, and that's going to need a lot of investment as well, and that's all infrastructure.
And resilience as well. Resilience is going to be a major part of every nation's development.
Absolutely. And I think, again, this is where you need to parse out what can be done by the private sector, what can be done using public financing, and what needs to be grant funded. There are some projects in resilience which are not revenue generating, or not revenue generating as yet, but are extremely important. So again, I think the combination of the three needs to be optimized.
So that's the role of the CIB, to not only go after the obvious thing, but also to stir the pot to make sure that those nascent technologies, industries are really being invested in as well.
Absolutely. And this is where private capital it's a very important partner. As much as we can't crowd in, we want to crowd in, not crowd out. They have the expertise and they do have balance sheets. And by the way, they all want to invest.
How does AI help you?
In a personal day-to-day life?
No, in your role of identifying what the priorities are and what the outcomes are.
I mean, I would say AI per se is not something that's used as efficiently as it can be. The construction industry is actually very behind from a digitalization perspective. So I think the next 10 years are going to be fascinating to watch. There's a lot of risks that we see in the world of construction and planning design. And I do believe that drones, AI, the whole ecosystem of digitization is going to transform how we look at risk and risk transfer in this industry. So today for us on a personal basis, I mean, it's not an act, like we don't use it from a scoring criteria perspective. I think it's used more to, like everyone uses ChatGPT today. So, but I'm sure there's better uses as we move forward.
I mean, if you could change one thing, I suppose, right now about Canada's infrastructure investment environment, what might they be? What would make it easier for you as an organisation to really get that investment into the places that it's needed?
So what I will focus in on is there needs to be, and I do think Major Project Office will help with this, there needs to be more collaboration between grant funding agencies and financing agencies like us and Building Ontario Fund, for instance. Why do I say that? If you're a private developer looking at a project, if there is a grant funding opportunity, you're going to chase free money. Only when someone says free money is not available will you come to us because we are repayable. So I do think, and not to say this does not happen, it happens in a variety of different sectors, but I think more can be done. And I think the approach needs to be that where opportunities are repayable and where there's a stream of revenue that comes in, we need to maximize financing dollars. We need to maximize use of funds, which are both private and public financing dollars, because these are repayable and then will help reinvest back in infrastructure in the future. So I think that collaboration needs to be tighter.
I mean, we talk an awful lot about the need for private investment in the UK, for instance. And 30 years ago, the UK was quite pioneering in the use of private finance. That is now considered something of a dirty word in the UK. What should nations like the UK, other parts of Europe, or other parts of the world learn from what Canada's doing and what the CIB is doing?
I think that's a great question. I mean, the UK does have the UKIB now, which I think is doing some very interesting things. I think the way I would answer that is, I think what Canada has done well is understand divorce policy from execution. And I think that is really important because when you mix the two, you seem to get the agendas and what's needed gets mixed up, and you're not actually doing the project the right way.
Politicized.
Exactly. So I think that's one thing that I can think about. And the second thing I think is it goes back to financing funding, and I think the UK does this now, which is looking at optimism bias and strategic misrepresentation. I think this is a problem across the world where it's very easy to think of costs being underestimated and revenues being overestimated. And when you're looking at a business case, and this is because CIB is an investor in infrastructure. This is our job every day. We look at due diligence.
Hard rigor about what is actually you're trying to do.
Exactly. We look at the project upfront to say, will we get repaid? If we don't get repaid, this project is going to be in trouble. And no one's going to bail us out. We're going to lose money from a taxpayer's perspective. And so the amount of work that we need to do upfront, I think, is really critical.
So final point, given that we're in a room talking about transforming infrastructure performance, what does the infrastructure sector need to do to make those projects stack up, to make them more robust, to make them more investable?
So I think there's a lot there's a lot going on already, but I think there's a lot of, from where I sit, making everyone a sophisticated owner. And that's a really important aspect, right? Like when you actually You need to be educated, you need to have the experience, you need to have the rigor, and you need to have the guts.
Sophisticated owner as opposed to an intelligent client.
Exactly right.
There's a difference.
I know, that's what I mean. And so you need to have both practice and literature to know how to deal with complex problems.
Okay, and that therefore those sophisticated owners are driving an industry towards being more efficient, more effective,
Robust.
and robust.
Yep, that's
Big challenges ahead then.
absolutely, but that's what we're here for.
Yeah, and it's an exciting time for you though.
Absolutely.
102 projects down. How many more have you got up your sleeve?
Oh, at least another 100 more.
Well, let's keep an eye on those then. Divya, thanks so much for sharing your thoughts. It's a really, really exciting area, particularly in Canada.
Thank you.
Many thanks for joining me. Well, as I said in my introduction, Canada has big opportunities and big challenges ahead when it comes to delivering its infrastructure and growth ambitions. And the Canada Infrastructure Bank's role has been and will continue to be critical in securing this ambition. And it certainly is a model that the UK and the rest of the world might well learn from. So I hope you enjoyed that brief look at exactly what is going on over the other side of the Atlantic. Sadly, however, that is all we have time for today, but we have more from the Infrastructure Podcast in the pipeline and more guests to talk to as we continue to probe the big issues faced across the sector. If you haven't done so already, do check out the Infrastructure Podcast website, www.infrastructure-podcast.com, where you'll find background information and all the latest podcasts to listen to and to share. So, thanks for joining us. Thanks again to Divya, and I look forward to seeing you again very soon.